I will most likely lose 50 to 100 subscribers based on this video, and I'm still making it because I think it will help out a lot of people. Now, the reason I say that is right now, so many people are hateful of anyone that says anything bad about the crypto market. They say that they're spreading FUD. Now, FUD translates to fear, uncertainty, and doubt, and the fact is there's a lot of fear, uncertainty, and doubt for, I think, the right reasons in the crypto market right now. I'm not saying anything bad about cryptos, right? I'm not saying anything bad about Bitcoin or Ethereum. They are still working just fine. But the centralized players have been taking advantage of you and of me and of the people on their platforms. And I think we have to be careful. Wall Street Journal just posted an article less than a few hours ago talking about Binance and how what they've done is not right and how it's not potentially safe enough. So I want to talk about that. There's some other stuff that we have to talk about in the meantime, though, too. We do have some big events coming up, but we will hit on all that in the video. I'll put timestamps underneath the video. I just want to say, if you do appreciate this, someone that actually is giving you what's happening now, instead of trying to fluff it up to get views and to get subscribers, hit the subscribe button underneath the video, because I do lose people on videos like this. The fact is, I would rather follow people that are actually giving me the news than people that are just spraying hopium every single video or talking about Dogecoin to $2 or $10 or whatever. I want to know what's actually happening, because otherwise people can lose money. If you just thought everything was FUD with FTX, the fact is you lost money. So I'm going to continue to bring videos like this, even if I lose subs, because I think it is important. So just know that. I do want to thank Margex. I'll put a link to them underneath the video, and I'll talk about it more later in the video. But again, you can skip around. Now, Bitcoin, crypto in general, has been kind of sideways the last few days. Everyone's kind of waiting for the CPI that comes out on Tuesday. Obviously, if that comes out lower than expected, that's great. Markets will rally. If on Wednesday, when the Fed raises rates, they raise by less than 50 basis points, or even if they raise 50 basis points, most likely the markets will rally. If they raise by 75, the markets will fall. And depending on Jerome Powell's speech, depending on if he's hawkish or dovish, that will obviously influence the market. I don't want to talk about that today because it's pretty obvious, right? But we do have some important stuff to talk about. So, first of all, cryptocurrency transactions over 1,000 euros will face due diligence inquiries in the EU for your protection. Of course, this is happening at the same time. Do Kwon, who lost $40 billion, maybe more, $60 billion, and Sam Bankman-Fried, who lost a significant amount of money to investors, whether you're storing crypto on the exchanges or you have crypto on another exchange that had contagion, had exposure to FTX. The fact is, these people are still free, yet they are watching you for every single penny. It happens in the US as well, on taxes and then on transactions. This is the world we live in. I think it's important for people to realize this, that this is unfair, but that's where we're at right now. Now, kind of similar, or on the same track, Sam Bankman-Fried tried to destabilize crypto markets to save FTX. So this is Wall Street Journal that has reported this now, just as of a few days ago. Tether executives and Binance CEO CZ worried that Sam Bankman-Fried, former FTX CEO, was attempting to destabilize the crypto market, aiming to save the now bankrupt exchange. Messages seen by the Wall Street Journal of a Signal Group chat named Exchange Coordination reveals an argument between CZ and Sam Bankman-Fried on November 10 about Tether's stablecoin USDT. According to the report, CZ and others in the group were worried that the trades made by Alameda were focusing on depegging the stablecoin, which would have a ripple effect in cryptocurrency prices. CZ said, "Stop trying to depeg stablecoins and stop doing anything. Stop now. Don't cause more damage." Now, Sam Bankman-Fried denied these claims to the Wall Street Journal, but it seems pretty on par. Bring some of the attention away from him, bring a lot of different exchanges down in the meantime, and then be able to go a little bit further, go a little bit longer without a bank run because no one's going to notice. Now, if I remember right, if we look here on Tether, we did have a little bit of a depeg around this time. I remember specifically people were talking about this. So back here, November 9 and 10, right, we fell down to 98 cents. So it seems pretty on par. It seems like this is what actually happened. I would not be surprised at all. Now, I'd just like to continue to update you so that anyone that thinks Sam Bankman-Fried is not in the wrong, if they think that he just did this by accident, I think that they should see that this was on purpose, right? The media is painting Sam Bankman-Fried in a pretty positive light, especially considering what he's done. So I want to keep on spreading some light on that. Now, something that just happened, Lodestar Finance exploited in flash loan attack. Now, they lost a couple $1 million. I don't really want to go through too much about what happened, but the attacker made around $5.8 million. Lodestar states that nearly $2.8 million of the GLP, or about $2.4 million, was recoverable, which should be used to repay depositors. The company is trying to negotiate a bug bounty with its exploiter. Now, this just shows again that we do have to take cold storage and custody very seriously right now. This is probably the most important time to have custody of your crypto because so many exchanges are going down and having problems. Now, sometimes I do talk about exchanges, like I'm about to talk about Margex, but the fact is, I think these should be used to trade or to get access to crypto, right? Deposit fiat and then get crypto out and then move it somewhere safer. So I will talk about Margex. Just know that after you trade, I suggest taking money off of exchanges. Now, I want to thank Margex for sponsoring this part of the video. It is so easy to long and short crypto on Margex. Now, there is a link to this underneath the video. Basically, all you have to do is pick the crypto that you want to use, put in your position size, how much of that bag do you want to put in there, and then the leverage. And if you want to short it, you just hit sell. If you want to long it, you just hit buy, and it's that easy. It gives you all these different indicators down here, including the liquidation price, open price. You can set stop losses as well. You can long and short Bitcoin, Ethereum, XRP, Litecoin, and more. Of course, only do this if you're an experienced trader, but I would highly suggest it. There's a link underneath the video. Then I want to cover some of the top investing tips in a recession from Cointelegraph. Then we'll get to Binance. But they say that even though the market is experiencing some tougher days, that doesn't have to stop you from finding ways to make money. So first of all, they say option one, save cash. I agree with this. So we're going to go through a couple things that I'll add in here. But option one, save cash. There's no shame in sitting on the sidelines or saving cash or stablecoins. When bullish momentum returns, you will have plenty of dry powder to make allocations. This would have worked really well throughout the year if you had just bought nothing. Now, I've said the entire year that I think you should have cash on the sidelines. Now, I wasn't necessarily saying save all your cash because I also believe in dollar cost averaging, which is number two, right? They're giving different options. But I think that you can do both of these, dollar cost average, but also save extra cash because you don't want to put everything into the market or be too aggressive. So I also believe in dollar cost averaging because it is really hard to determine the bottom, right? It's easier now that we're towards the bottom, most likely, than it was a couple months ago when we're at $30,000 because we had more room to fall down. But the fact is, it's still really hard to determine where you're going to fall. Find assets that outperform. So decentralized perpetual exchanges have been darlings of the bear market. People flock to decentralized exchanges and decentralized options after the FTX scandal. Now, I wouldn't give this as an option. I'll be honest. If you're trying to find assets that outperform, typically the best asset that outperforms consistently during the bear market is Bitcoin. So if you kind of take it that way and say, hey, move to Bitcoin because dominance goes up or because there's too much risk in altcoins in a bear market, I would agree with that. I've done that a bit as well. I sold all my smaller positions, put it into Bitcoin essentially. I only have 4 or 5 different cryptos, and I've only been adding to Bitcoin for over 6 months, longer than that really. But I would not try to go out and find smaller cryptos to outperform in a bear market. I don't think that's a good use of time because a lot of them will bleed pretty significantly. And some of the ones that performed really well before are performing really poorly now, like Solana. So the fact is, most of the time when you try to find assets like this, you buy them when they're going up. And then the fact is that they've already outperformed, so then they usually fall or people take profits or something. So I don't know if that's the best option. Of course, they're going to put it in here. And that's an easy out. Just when the bear market's going down, just find what goes up, right? But that's not very likely. Most people can't do that. And a lot of the people that do that are lucky, right? They say use derivatives. There are many strategies using derivatives and combinations of contracts to ensure profit in downtrending and sideways markets. A lot of the time people do this in the stock market, all right? You can sell cover calls, you can buy puts, that kind of thing. Now, I think this is more difficult in a bear market because I think a lot of people just don't know how to do it, and it's even more complicated in crypto. Also, they say that you can do something that's neutral, like staking on a liquidity pool or farming. I think that's a little bit risky too. We've seen so many different entities go bankrupt or have hacks or exploits. I think now is not the time to get fancy with anything, honestly. And then they say keep your head on while others are losing theirs. They say what safety equipment? Well, an emergency fund that's kept in cash is a good starting point. So I think that's obviously a good point there. Just keep your head on. Markets will go up at some point. It's always hardest to invest when we're falling, but that's typically one of the better times to invest. Now, I would add a couple other things on this. Just surviving, right? If you hear about any exchange having problems, withdraw your crypto. If there's a real basis for it, and a lot of people are commenting on it, and it seems pretty likely, the fact is it probably is. And we've noticed that throughout the entire year. Whenever there's been rumblings of some crypto or some exchange having issues, it typically does have issues, and they're exploited because people can make money. So I would say surviving and taking crypto out early and moving it to something like cold storage or a hot wallet or something where you have your own keys is very important. So I would just add that to the list, and then also just probably cold storage to the list as well. So withdrawal from exchanges is one, and then use cold storage for another, just to have real custody over your crypto. And I would say too, if you want to trade, I wouldn't do the derivative route. I wouldn't use derivatives as much because I think it is more complicated. I probably would use leverage. Now, of course, I would use a very small amount only if you're an experienced trader and you're willing to take on that risk. Just keep that in mind. Like when I do leverage trading, I spend a very little amount of my overall portfolio. But sometimes it is easier, I think, to make money doing that than it is to use derivatives. And I'm not talking about 100x leverage. I'm talking about 5 or 10x leverage. I made a significant amount of money actually on FTT when it was falling down in a very short period of time. So it is easy when you don't have to go out and try to find these things. Sometimes there's just something that happens and you realize, okay, this is just going to continue for a while. And I don't really know how to explain it better than that, but you get clarity in that moment that something is falling down pretty significantly. And I don't want to say it's safe to short or to short on leverage or to long, but sometimes you just have a very strong feeling. So that's my opinion on that. Of course, only do it at your own risk. Now, this just came out. Binance is trying to calm investors, but its finances remain a mystery. Now, this is coming from the Wall Street Journal. This is typically behind a paywall. I will post a link to this article, which is just on archive.ph. I've never gone to this website before today. Just keep that in mind. I've never heard of it, but I did see that it was a unpaywalled version. So I will post that underneath the video if you want to go look at it. Binance recently made a commitment to transparency, but it has a long way to go before it discloses enough meaningful information to give investors confidence in its future. And this is accounting and financial specialists saying this. Now, I covered this a couple times already, but there's more information coming out on it. The world's largest cryptocurrency exchange is seeking to reassure customers about the safety of their holdings after the collapse of FTX. They have made it a mission to set out proof of reserves on a lot of different exchanges, and they want to show that their coffers are not bare like FTX. This is coming from Binance Chief Strategy Officer Patrick Hillman. Over the past month, Binance has publicized details about their crypto wallet addresses. It hired an outside accounting firm to prepare a proof of reserve report, quote unquote, covering a portion of its liabilities and assets, including a small set of financial data, and it has promised more information will be forthcoming. When we say proof of reserves, we are specifically referring to those assets that we hold in custody for customers. Binance says on its website, this means that we are showing the evidence and proof that Binance has funds to cover all of our users' assets one-to-one. Investors still should not be satisfied. This is from an accounting professor at Barrett College, and I just covered another professor that was saying something very similar. I can't imagine it answers all the questions an investor would have about this sufficiency of collateralization. That's the main thing it seems to speak to. The report said that its purpose was to show customers that the assets covered in the report are collateralized, exist on the blockchain, and are under the control of Binance. The reserve report released Wednesday is a 5-page letter from a partner at the South African affiliate of the global accounting firm Margex, which is considered a pretty legitimate accounting firm, pretty large. It contained 3 numbers. The letter wasn't an audit report, didn't address the effectiveness of the company's internal financial reporting controls, and Margex said that it did not express an opinion or an assurance conclusion, meaning it wasn't vouching for the numbers. Margex said it performed its work using agreed-upon procedures requested by Binance and that we make no representation regarding the appropriateness of the procedures. Basically saying that they reported they found exactly what they reported, and they're not saying that this is necessarily sufficient. They probably don't think it's sufficient because it's not a full audit. The letter was addressed to a Binance entity called Binance Capital Management Co. Ltd., which is based in the British Virgin Islands, though it wasn't clear if the assets it counted were held by that unit. The report didn't show total assets or total liabilities. Rather, its scope was limited to Bitcoin assets and Bitcoin liabilities. So basically saying that it did not show all assets, just Bitcoin. And Binance said it would begin releasing information about other crypto tokens in the coming weeks. In the interview, Binance's Mr. Hillman said that Margex letter covered all the Bitcoin assets and Bitcoin liabilities for the company's Binance.com exchange. Although the Margex letter itself didn't say this, Mr. Hillman also said the Margex letter didn't cover any assets or liabilities at Binance US operations. So just Binance.com, not Binance US. This is the first step in what's going to become a much longer process. The few numbers in the report raised fresh questions about the ability of Binance to meet its financial obligations to customers. On the last page of the report, called Report Details, which covered the 3 numbers, each denominated in Bitcoin. One number was labeled Customer Liability Report Balance and showed a balance of 597,602 Bitcoin. Another number labeled Asset Balance Report showed a balance of 582,486 Bitcoin. The upshot is that the total Bitcoin liabilities cited in the Margex letter were 3% greater than the Bitcoin assets that were included within the scope of the report. Now, Binance didn't meet its 1-to-1 reserve ratio. In dollar terms, based on Bitcoin's price at the time, the liabilities would have been about $9.68 billion, while the assets would have only been about $9.43 billion, or about $250 million smaller, according to calculations by the Wall Street Journal. The third number painted a different picture. The number was labeled Net Liability Balance, excluding in-scope assets lent to customers, and showed a liability figure that had been adjusted downward by about 21,860 Bitcoin to 575,742 Bitcoin. Binance noted that it let its customers borrow crypto assets through loans on margin accounts. Binance, in my opinion, is one of the safest exchanges. Now, that doesn't mean that it's safe. I think that's where people get this wrong. Just because it's safer and because they're a cash collecting machine does not mean that your money is completely safe. And the fact is they did not show a full audit. Maybe there's a good reason for this. Maybe it's that they want to get these out quickly to reassure customers, and then they're going to do a full audit because they know that a full audit would take much longer. But I don't think this is good enough right now. And they have not committed to having a full audit. So the fact is they have reported kind of a gap. They're not showing all the cryptocurrencies. They could easily move cryptos around after this happens. They could then go and use crypto in some sketchy way. And the fact is it's not safe enough to keep your crypto on Binance, on anything really, especially with what we have seen recently. I think a bear market is, especially right now, a bear market is the worst time to keep the majority of your crypto on an exchange. And as I said earlier in the video, I still think you can use exchanges. I use Binance. I use Margex as well. If I want to use leverage, I use Margex. If I want to just buy spot Bitcoin or spot crypto, I'll buy it on Binance, but then I'll transfer it off. And I think that's what you really should do in this kind of market. And I realize, again, I'm going to get people that say that this is clickbait, but it's not. Binance is not safe enough. Binance is in trouble, just like a lot of other exchanges, right? They are in trouble because of their own greed. And while CZ, I think, is a better player than most, he's not a degenerate. The fact is you need to take custody of your own crypto. And I don't care if people are mad at me for saying that, but the fact is that people will get caught off guard. And at this point, I don't think any exchange is safe enough for the majority of your money. Now, if Binance went down, they have a significant amount of the volume. This would be devastating. Binance has 10 times, 15 times the amount of spot volume of any other exchange, right? And if you take out Coinbase, it's 60 times more than Kraken. It's 30 times more than KuCoin. In terms of derivatives, it's also the largest by a long shot. OKX is up there as well, but the fact is they run the majority of volume. So if you have your cryptocurrency off of Binance and Binance goes down, it's going to be devastating for the space. It's going to set us back a long time. But the fact is you might be able to capitalize on that. You'll know that the crypto market is down significantly if that happens. You can come in with your dry powder on some exchange, right? Find a safe one, and then get a significant amount of crypto. If you don't have your crypto off of Binance, for example, or the majority of it, you're going to be capitulating. You'll be trying to get your crypto out. You'll be focusing. You'll be having so much stress. You'll probably lose your money. And then you won't have the guts to go and buy crypto at probably a huge discount at that point. So keep that in mind, right? I'm not trying to spread fear, uncertainty, and doubt. I'm trying to inform you. Binance is not doing enough right now. I'm going to be tweeting at them after I make this video. I'll put a link to it underneath the video as well. The key is they need to show more than just proof of reserves of Bitcoin. They need to show liabilities. They need to show liquidity. And that is what gets a lot of the exchanges in the end. They did not show that. They did not show, again, any kind of loans that they have. They claim that they have no loans, but they are not giving a full audit. So I'm going to point that out on Twitter. Please go follow that, retweet it, spread it around. Thank you so much. Check out Margex underneath the video if you want to support the channel, and I'll see you in the next one.